Welcome to the Society Pod, a podcast for entrepreneurs, marketers, and leaders. Here's your host, Jessica Yarmy.
Hey there, everybody. Welcome to this week's episode of the Society Pod. My guest has been sharing his private equity background and his entrepreneurial finance brain with the fitness industry for the last 20 years. He's currently the founder and managing partner of Integrity Square, in addition to being the current host and founder of the Halo Talks podcast network. Welcome to the show, Pete Moore.
Pleasure and great to see you again. I've been behind the scenes with you in many of your ventures and always thought very highly of how you approached business. So when you allowed me to come on the show, I jumped at the opportunity. So thank you.
Oh my gosh, you were one of my first 5 invites that I had in my mind, but I waited until episode 55, so I would have a little bit of practice, so I'd be able to keep up with your fast New York talking.
I'll try and slow it down. I was watching a LinkedIn about talking in cadence and talking slower, and then people will have time to digest it. If I ramp it up, it's because I'm excited. If I ramp it down, I'm trying to cadence it.
I like this 2025 version of you, and thank you for sharing this social public speaking experiment with me. When you introduce yourself to people, how do you introduce yourself? Because you're involved in so many different things and you have so many different skills that you bring to the fitness industry.
Yeah, it's a great question, and thanks. Yeah, as you see in my moniker here, I say Pete Moore, Captain Halo, and that's kind of what I want to be. I want to champion the health, active lifestyle, and outdoor sector and have people say I'm part of the Halo sector. I'm part of the Halo movement, and I'm part of the Halo effect. My day job is I help connect capital with entrepreneurs and executives. I try and help people build businesses that could get a lot of money to continue to grow their businesses of affecting their areas of influence in their cities and their towns and their communities, and do that through getting capital to get behind scalable businesses. So at the end of the day, I'm a banker bringing money into the sector, and my goal and vision is that we can solve diabetes, we can solve obesity, and we can solve loneliness by investing in companies and people that have great ideas and sustainable businesses in the Halo sector. And the only way you are going to compete in a capitalist society that we are in is having the first 7 letters of the word capitalist. And you need capital to grow, because this is no longer an industry for mom and pop operators to go and compete for leases, go and compete for capital, if they don't have institutional backing, because the game is changing where you're effectively an independent operator and you are using your personal financial statement to get a loan or to put your personal name on a lease or to get an SBA facility. And all of those things are not needed if you have an institutional capital or a family office or a established financing partner. So you're kind of playing checkers, as I say, while other people are playing chess, and you will get outflanked because of capital.
So I know the money side is definitely your area of expertise, but I want to dig into some nomenclature first, because you say Halo sector. I already used the term fitness industry twice. How do you differentiate Halo sector versus fitness industry?
Yeah, so the reason why I came up with this term is I used to tell people 25 years ago that I was a health and wellness banker. The word wellness never really resonated with me coming out of my mouth or hearing it. And quite frankly, nobody ever came to me for the first 17 years I was doing this with an awesome wellness idea. It kind of dropped like a dead mic, and the business model kind of dropped like a dead mic as well. So I researched on Google, because there was no ChatGPT, where does this word wellness come from? Because I'm always trying to find like the derivation of a word, and some of this is what we'll talk about on this podcast. Words are extremely important in our society and the way we communicate and the way we deliver what we're trying to deliver. So it turned out that in the 1950s, there was a guy named Dr. Halbert Dunn who worked at the Mayo Clinic. He was a biostatistician, and he was looking at the data and seeing everybody getting sick and obese and all these chronic diseases, and he basically was trying to come up with the antonym of illness. So the wellness industry was spawned being the opposite of illness. So the wellness industry technically is the not sick industry. People like you and a lot of our cohorts that champion how awesome a lifestyle you can have if you exercise, if you eat correctly, if you do the right things and put yourselves in the right situations. I needed to come up with something better than wellness. And I was not going to start wellness talks because I can't do it. It would be against how I feel about the sector. So one night at 3 o'clock in the morning, I woke up and I'm like, maybe I had a dream or I just like woke up and I was doing like a Scrabble, Boggle, like acronym thing in my head. And I'm like, wow, the term HALO could stand for health, active lifestyle, outdoors. This kind of like covers the person that I am, the person that you are. Like I want to have preventative health. I want to be moving around as much as I can. I want to use a stand-up desk. I want to get supplements. I want to put protein and creatine in my body. I want to go to the gym. I want to take a run outside. I want to go on a vacation and not like be in a hotel room and watch TV and eat, Cheetos. I want to go and I want to do a kayaking trip. I want to, hike a mountain. So all these things kind of fit under the HALO acronym where people could say, hey, I'm a HALO company because I provide some product or service to someone that wants to live an active lifestyle. So I've been using this acronym for 8 years. Exactly 8 years ago, I had a retirement party for the word wellness, as if it was like a character out of like the old movie Weekend at Bernie's. We blew out the candles and wished wellness a happy retirement. And we want people to embrace this term because I think it accurately describes and does not exclude anyone who's providing, whether it's a protein bar that has 30 grams of protein and 1 gram of sugar, or a lifestyle resort that wants to attract people like you and me because they know that they've got yoga, they've got Pilates, they've got hiking trails, they've got bicycles. All that is what a HALO evangelist and hopefully the mass market wants to do in their spare time. And also, when I'm not in my spare time, I want to eat egg whites and I want to, go to SweetGreens and I want to like take care of myself. And I want to live as long as I can, but I want to be strong and healthy and view what I put in my body as fuel and not junk. So that's a long-winded answer to why I want to really push on HALO. And I also want people that are investors in the space to understand how big it is. And when you start using the word wellness, it's like a depressant, where I want people to view it as like, hey, I'm investing in the HALO sector. We're creating serious change. There's all this money flowing in, and there's all these touch points that once you're in the HALO sector, you're buying sneakers, you're buying sports equipment, you're buying organic food, you're buying supplements, you're eating vitamins, you got an Oura ring. All these things kind of touch every person that's in the sector as a consumer. And that's where I want to take this.
So you and I were both at the Athletech event in New York a couple weeks ago, and I think they did a good job of representing all of those different aspects of the health and fitness industry, of the HALO sector. And I think they talked about a lot of the trends that you just kind of talked about, like in the lifestyle space, in the travel tourism kind of space, that are on the edges of what would traditionally be defined as the fitness industry. But as you went to that event and as you look at the space as a whole, like all of the different aspects that you just talked about, like what trends are you seeing? What trends are you watching? Like, where do you see the money flowing right now?
All the health clubs that are operating right now in either the low-cost segment, the low-cost segment 2.0 or HVLP 2.0, as well as the high-end segment where a Lifetime and a Bay Clubs and a Fit Athletic, all those companies are exceeding their membership numbers pre-COVID, have all raised their prices accordingly, and are basically taking back some of the market share that they might have lost to boutique studios, been able to capitalize on the fact that they do have more amenities and more programming. The health club industry is strong, and I would say like we're almost back to the equivalent of like the roaring 20s. Like a renaissance period of investor interest in medium to big size boxes. That's kind of my core business, is helping bring capital into those groups. Where I'm also seeing a lot of opportunity, we're invested in a company called Hyrox, which does infrared sauna blankets and electromagnetic field mats, red light therapy hats. I think workout recovery is really still in probably the second inning, if I was to use a baseball analogy, and there's going to be a tidal wave of mass market users that is not just scraping the 10%. Part of that's going to be related to fitness, and part of that's going to be related to beauty. And those things are going to converge nicely and land in a good place, and people are going to make a lot of money in the recovery space. I think one of the issues in the recovery is that workout recovery has been viewed as almost like a warehouse where you as the user goes in there. We got a cold plunge. We've got Normatec boots. We've got a flotation tank. We've got infrared sauna. We've got an IV drip. It's like, could somebody like play the game of Candyland with me and tell me which one I'm supposed to do first? If I do cycling at 8 o'clock in the morning, should I do a cold plunge before it or after? Do I do an infrared sauna after a cold plunge, or does that negate the cold plunge effect? I have no idea how to embrace workout recovery as a prescription or a routine because no one's done the work at any of these bricks and mortar companies to actually give me a prescription and turn it into what my daily workout routine should be. And if anyone's listening and wants to use that as a way to actually manufacture a business model that would be recurring, that is where I think we're missing the mark on workout recovery. I see a lot of opportunity in recovery. There's clearly a big opportunity on the data side and AI. I don't think anybody's figured that out. I think the part that concerns me about AI and data, no one's actually doing the real work to get the data. I still go into SoulCycle, and I'm a beloved member of the SoulCycle cult. I just did my 600th class, by the way. Nobody has ever asked me, hey, what are you looking to achieve? How can we help you reach your goals? I'm just like, is anyone going on like my Instagram account? Is anyone going on my LinkedIn? Does anyone want to really know who I am? And all these clubs that have like 10,000 members, somebody checks somebody in, and then what do? They go back on their iPhone and they go full of towels. When what they should be doing is they should put an activity log. Say like Pete came in here, he was wearing a shirt that said, was at Canyon Ranch as an example. It looks like he's been doing 30 soul cycles in the last 40 days. Maybe there's some event that he's like planning for. I asked a health club operator a couple of months ago, he had 10 clubs. I said, how many event planners do you have in your membership base? He's like, dude, what are you talking about? Why would I know that? What's the reason for even asking me that? And I said, an event planner that works out in your club knows every bar mitzvah, sweet 16, wedding, anniversary party that's going on within a 20-minute drive of where we are right now. They are like the front lead gen engine for you to be able to put together like a bachelorette 90-day workout program for $300 for everyone who's in a wedding party. Or everybody wants to look good in pictures. Okay, I'm a health club operator. I can actually make you look good in pictures if you give me 90 to 120 days of your time and you pay for it. So I feel like there's all this data out there and everyone talks about it, but you got to get the primary data. And I've said this for years, that you can't have artificial intelligence until you have intelligence. So once you get the intelligence, then you can go to all these whiz-bang awesome companies. We work with a group called Promotion Vault that rewards intelligence. That's the type of thing that is going to make you an amazing operator and give you better unit economics, because you actually have a relationship with someone and you use the data to enhance the relationship instead of hide behind it by saying, what are you talking about, Pete? I sent an email out. I sent text messages out. I'm like, yeah, but you're not really diving in and like understanding people, what their goals are, what their frustrations are, what their triggers are. And if you do that, you become the authority and you own that person because you built the relationship. And if they leave your club, they basically broke up with you from like a human connectivity. They broke up with you. You did not provide what they were looking for, or you didn't care to try to provide it. So data is going to be important, but it's only going to be important to people that actually gather it and then use it and actually sit down and understand it, and not just like wait for some report to fly in on a PDF and be like, oh, yeah, we got 12 event planners that work here. Because nobody's filling in that field of like what people do. So that's where I think there's going to be a lot of opportunity, but you got to devote the resources, instead of hiring like a director of personal training, maybe go hire a data scientist.
Yeah, I think there's tons of opportunity on the data side, not just for brands, but for the industry as a whole, where you say you can't have like artificial intelligence until you have intelligence. I think a lot of brands are about to layer AI into their own silos, and then we don't have the cross-modality kind of learnings that we would need as an industry to go to the hill and say, fitness is essential, to kind of make that prescriptive, preventative kind of case that we've all been trying to make as fitness people. I agree with you. I think there's so much opportunity there. What I would want to see from that data project is companies working together to bring that to life and being willing to collaborate together to create the prescriptive kind of solves that you're talking about. You mentioned a couple brands. You mentioned SoulCycle. Congrats on the 600th class.
Thank you.
You mentioned Higher Dose. What other brands are you watching that you seem to think like are positioned well for growth or to ride this next wave?
Well, it'd be remiss for us not to talk about the benefit and the growth of Pilates as a modality. I've done it several times. I don't do it weekly, but if you think about like time and effort to results in the mirror, like there's nothing better than doing Pilates for 30 to 60 days and then looking in the mirror and be like, wow, like this really like activated parts of my body that I didn't even know existed. It's from a muscular skeletal standpoint. So I think Solid Core has done a great job. I think Club Pilates, even though they're owned by Expo, has done a great job. And some of these other companies in the space that are some Strong Pilates just opened up their 100th location. So those are brands that I think have staying power, and that's going to continue to grow. I love what Lifetime is doing from a standpoint of adding pickleball and really going all in. And then I think Planet Fitness has really continued to establish their position in the market that they are the low-cost provider, but they're raising their rates and they're thinking about personal training and group exercise. And the one thing that Planet Fitness has never talked about, because they couldn't, is getting people results. Planet Fitness business model is getting people access. It's not getting people results. And I think they actually might turn the corner and do some programming that could help people out and also do larger boxes and get more people to get as an entry point into the space. So those are some of the brands I'm excited about. On the longevity and anti-aging side, there's a lot of groups out there right now that are doing hormone replacement therapy. I have not done it myself. I can't tell you firsthand. That's obviously making people feel stronger and more confident and look better and have better relationships. We work with a company called Serotonin that, covers a lot of these anti-aging and longevity modalities. But one of the things that I'm concerned about is a lot of the unit economics of companies that are in this med spa longevity space. It takes them a long time to ramp up and find clients that want to do these types of procedures. And I think maybe that whole category has kind of missed the marketing communication that is required. Do I want to live till 100? Some days I don't want to live till 100. I want to live till like 85 and then call it a day, right? Because it's stressful life that we all live in. But there are times that I'm like, I just want to feel better. Like, how about like tomorrow, next week, next month? How about like in 10 years from now? Can I get up and like throw a football with my nephew? That's what I want to do. I don't want to be like live till 100 and like go to everybody's funerals. Like, that's not my objective. What longevity centers and med spas, they should probably be selling like instant happiness, instant gratification. You're going to look better. You're going to feel amazing. You're going to love life again. You're going to be stronger and more confident. And let's leave like the anti-aging and longevity to like the biohackers that like want to link up their brain to fucking everything that Elon Musk and like all these other guys are talking about. I don't care what happens in 30 years. I care what happens in the next 72 hours.
For sure. As my marketing in the fitness industry career started, I started at Gold's. And like one thing I've been passionate about since that point, we can't just throw people into the deep end. I've said that about the gym space, and I think it's true for the longevity space as well. There has to be messaging in the shallow end, messaging that brings people into the modality and then takes them on the journey through to the deep end.
I was at Gold's Gym back in 1999, and I was very close to the brand for 3 years. The thing that brought the most people into a Gold's Gym back in the day was the $100,000 body transformation challenge that had a before and after picture. And for some odd reason, the industry doesn't do that anymore. And the reality is that most people go into the gym because they look in the mirror and they're like, I am better than this. I do not want to look like this anymore. I'm not putting on a seatbelt extender. When the plane lands, I don't want my body to shake. Those are things that are like real anxiety and frustrations. And if you get strong and you lift weights and you go to the gym for 90 days, you will change your life. And I feel like somehow we got all crazed with like Here's the weights that we have. Here's all the program we have. Well, what is the frustration that you're solving? You're going to feel and you're going to look better. And that's like the most important thing to most people. Shout out to Derek Barton, who's Chief Marketing Officer for ages at Gold's, for like retaining that mantra.
Shout out to the Gold's Gym family in general, because the family is strong.
Yeah, so as an aside, I put this slide up the other day at the ATN conference. A lot of investors come to us and say, I want to invest in a company like EOS. I want to invest in a company like Fitness Connection. I want to invest in a company like Vasa or The Edge. And I'm like, newsflash, kid who's like 20 years younger than me, who's running a private equity fund. I'm like, these are all Gold's Gyms that took their sign down and rebranded to their own brand so they had more territory rights. So don't tell me like you don't like Gold's Gym. Like, they're all Gold's Gyms. And if there was an ownership group back in the day, One Life is another example. If Gold's Gym corporate did not handle the franchising network like they ended up doing to try and recapture corporate territory, Gold's Gym would be bigger than Planet Fitness. Destruction of like the best brand in the industry and the one that I still love the most. I'm veering into marketing because it affects my business. I'm a banker. I help people raise money, and I want to help entrepreneurs succeed. The only way I could get money for you to build more locations is if you have a track record of showing me really strong unit economics. So if you have a 20,000 square foot health club and you generate $700,000 of cash flow, EBITDA, on $2 million of revenue, and you have 6,000 members, let's say, and you have 10 locations, do the math, and you've got 20 million of revenue and 7 million of EBITDA, I will get you money to build another 10 health clubs because you have a track record and a prototype that works. I dig into all these different components of your business to figure out how you can optimize it to get to the point where I could get an investor selfishly, right? I want to get deals done. I want to bring money into the industry. So there's more active lifestyle centers than there are movie theaters and like vape stores, right? I want to take over the entire retail category because that's what I want the world to look like. And I can affect that if you give me good unit economics to sell to someone. When I look at your marketing and somebody brags to me, they're like, oh, I only spend $900 a month per club on marketing. That's nothing to brag about, right? Because marketing is an investment and advertising is an investment in your revenue. It's not an expense. It shows up as an expense because it's matched against your revenue. But you're basically investing in bringing traffic into your clubs.
I know that you have started veering into my marketing space, which is amazing. And I know there's a hot topic in your mind about how we market in the fitness space. And one of the words that you're opposed to vehemently, which is appearing everywhere in the fitness space, is community. Take the stage and go on your rant about the word community.
When I see people talk about community, it's something I'm starting to get against because people are building community, but they don't really know what that means. And the word community came from like back in like the early days, you know, like 1000 BC or something. And it just talked about like a shared interest or like a commune is what it used to be called. People living together with common interests, okay? Interest in culture and identity. It doesn't refer to happiness. It doesn't refer to having friends in that community. It doesn't address the fun, and it doesn't address results. So people say like, hey, I'm creating this community, okay? My parents live in a 55 and over community, okay? And a community is a bunch of residences with the same rooftops that have a common landscaping company and a shared pool. And half the people don't talk to each other anyway. It's basically a place that has a fake police officer guard gate, like 300 acres and a couple pickleball courts and some clay tennis courts. All right, that's a community, okay? If I'm building a health club or I'm building a studio, I want to build a cult, okay? I'm not building a community of people that just randomly show up here. I want people who have avid intentions. I want people that have shared results and goals. I want like real friends that come out of this. And I want to have the energy and the enthusiasm and the fun and the happiness which comes from being part of a cult or being part of a fraternity or being part of a sorority. Stop hiding behind this term. It doesn't really define what you're trying to create. Like a positive cult, not like a Netflix documentary cult, because there's plenty of those. You know, so that's my rant here to say, like, stop collecting data, Okay, collect information on relationships. This word data is a bad word too, because you think it's all like science. It's not, dude. It's about like documenting what you know about people. That's what data is. And then using it to optimize that relationship. Community is basically like a really bad word for a cult.
So speaking of cult, can I get your thoughts on CrossFit and also Hyrox? Where are you landing with that part of the industry?
I think those are great brands. Obviously, CrossFit went through a pretty rough COVID situation and leadership changes. But if you talk to the average CrossFit owner, they love what they're doing. They're passionate about it. They are not looking at the bottom line. They are not trying to get private equity because they know they can't because they have no territory rights. And they like being the leader of their mini CrossFit cult in their area. And if they get 200 or 300 people and they can put food on the table and they can live their cult, they feel great. A testament to people that are entrepreneurs that say, you know what, I got everything I want right now. I've got like 1 or 2 CrossFits and I charge people properly. One of the issues with CrossFit and a lot of these other studios is that they'll give it away for like $99 a month. You know people that do CrossFit, right? It's one of the top 3 things they'll say about themselves when you say like, hey, what are you up to? They'll be like, well, I do CrossFit, I'm going on this trip, and I'm a graphic designer. If somebody uses your brand as one of the top 3 things to describe themselves, you have to extract the requisite amount of dollars in their pocket because that's how much they care and that's how like they define who they are. There's nothing wrong with an operator that owns 1 or 2, very profitable studios and you got 300 people that, love it and there's 100 people cycle out and another 100 or 200 come in. I like what they're doing and I hope they stay alive. On the Hyrox side, I have not had firsthand experience with this, but my understanding is that the member experience, the preparation for their events, I think is kind of like the next Spartan race, if I kind of understand it. And people love to challenge themselves, and it seems like it's broad enough where it may have broader reach than CrossFit did, welcoming them with open arms to the U.S. and to invest in the U.S. population.
Well, to tie back to Golds, we know Golds just opened their Hyrox training facility, and I'm proud of the Golds Gym family for getting in on that trend early, instead of kind of chasing a lot of things, chasing CrossFit, chasing cycle. I think there's a lot in that space that will probably pull some momentum from CrossFit because they're siblings, but I think Hyrox makes it a little bit more accessible to the everyday athlete instead of the 1%ers. You have like a front row seat to a lot of deals happening in the fitness industry and maybe like deals that have happened in the fitness industry. As you're looking at building deals or as you're looking at like evaluating companies, like what are some of the things that go through your mind when something crosses your desk to evaluate?
The most important thing from our standpoint is as much as you can put together a beautiful presentation and you can tell people what the brand represents and have nice glossy papers, it all comes down to what's your return on invested capital. How much did you put into this location? How quickly did it take to get to break even? What is this at a steady state? And fortunately or unfortunately, finance is about very simple numbers, not complicated. So people that come to me before they come to like a Halo Academy, like finance class, or I do these 2-minute financial drills now just to explain these terms. Finance is just addition, subtraction, multiplication, division. There is nothing more than those 4 things that you need to do to understand your business. It comes down to like how the company's doing, how much cash and EBITDA producing. That's kind of level 1. Level 2 is who's the management team? Do you have the right and the ability to scale this? Is it a big enough brand, reaching enough people that you can move this to another state? Mountainside Fitness, as an example, was only in the state of Arizona. I'm sure they'll go outside of there. They did a great job of basically saturating Phoenix and Scottsdale DMA, which is the 4th largest city, or 3rd now, with 17 clubs that all produce really strong metrics. Then it's a question of, okay, can this management team scale? And do you know the cities that you would go into? And do you have the bench? Terry Playcheck, good friend of mine, always said, you can't microwave a manager, and an executive team. You have to crock pot them. I think that's an important, quote and cliche to basically prove to someone that you can grow. And then it's just a question of, how fast can you grow? Am I going to franchise this? Or am I going to do a corporate model? Private equity groups are not venture capital companies. Venture capital companies will take a risk on the jockey. You know, if you're riding a horse and you might have to pivot and it's a big idea in a big market, there's like $40 billion or something that's been invested in healthy tech and preventative health and different types of concepts. But venture capital is investing in experiments. Private equity is investing in scalable businesses. And that's the big delineation between the two. I think the company Forward Health, which was like a big deal. There's a couple of these other groups that were out there that were doing similar to like a One Medical, you know, that just got in too early and just didn't get the client base that they needed, and they shut down. And venture capital firms shut companies down all the time. You just don't hear about it because they're taking early stage risk. Private equity doesn't want to lose a dollar. They want to, you know, make 2 or 3 or 4 times their money, and maybe sometimes they'll get lucky and make more than that. If you've got a business that's got 5 locations doing $3 million of EBITDA cash flow, and you have a team and you have the energy and desire to grow, the money's out there to help you do that.
What makes a deal a bad deal, or what makes a deal fall apart?
Let me answer the second one first. Every deal is not closed until it's closed. The most difficult part of the fitness industry on the bricks and mortar side is that when entrepreneurs start their business, they usually sign a templated lease agreement with the landlord. When you're selling your company to a buyer, and I'm helping you as your advisor to do that, that's almost like step 1 of the process. And then step 2 of the process is to get all of your landlords to allow you to get off of the personal guarantee you have on a lease, and also transfer the lease to the buyer. And some of those lease assignment clauses, which I know you've signed plenty of leases, so you know what I'm talking about. It might not be until section 22 or 36 of your lease agreement where it says you're allowed to do it as long as the company that you're selling to has more than $10 million of net worth, or is going to put a corporate guarantee on it, or it's at the sole discretion of the landlord, let's say. Hopefully it has something that says you can transfer it, and that transfer cannot be unreasonably withheld. But there's some savvy operators that know that this is part of the exit cadence, and they have put in there that if I sell it to a private equity group with institutional capital, it's an automatic assignment, and I can just notify you. I don't have to ask your permission. If there's a net worth test that says net worth, not tangible net worth, but net worth over $5 million, I can notify you that I made the transfer. Or if I'm a Gold's Gym operator and I sell to another Gold's operator, or if I'm Planet, I sell to another Planet, I notify you. I don't ask you. Deals sometimes get delayed and then die, and I'm dealing with one of them right now, unfortunately, where a landlord is trying to insert a demolition clause into a lease assignment because there's not enough term on the lease. They basically have a point of leverage that they're trying to take advantage of because they want to redevelop their shopping center in Texas. They're holding up the deal right now, and the longer this gets held up, the buyer is getting frustrated because they have a return on their time, and they don't want to hang around here. And they basically, and maybe rightfully so, say, hey man, that's the seller's problem. I didn't sign this lease 20 years ago that I'm now going to assume. And these are the things I need as a private equity-backed company to feel comfortable that if I pay you 5.5, 6 times EBITDA for this business, that the business has to be around for 5.5 or 6 years, or else I don't get my money back, right? So that's one of the things. The second thing that causes deals to die is when you don't negotiate a letter of intent that is like very detailed. Once I sign a letter of intent, if I say I'm going to buy Yarmy Fitness and I'm going to pay you $20 million and I'm going to give you 18 and I'm going to put $2 million into an escrow account, I will figure out the rest of it later, right? If you sign that agreement with me and you're all excited, hey, I'm like close to selling my business, I now have you beholden to me for 60 or 90 days where you can't talk to anybody else. And I'm basically going to absorb all of your time trying to understand and diligence your business. And then I'm going to put a legal agreement together. And that legal agreement is going to say, if you've got $1 million of personal training that you sold, I'm deducting $1 million from the purchase price because I got to service those. And you'd say, hold on, wait a minute. Like, it's only cost me 50 cents on the dollar. So why don't we just make that 50% of the $1 million? And I'll say to you, maybe you should have talked about that in the letter of intent. I'm just following the letter of intent. Maybe there's, lease security deposits that you have. and you come back and say with your lawyer, hey, we've got $400,000 of security deposits that we want to get back. It's like, sorry, you didn't put in a letter of intent. So deals die because you don't define like all the things that you could fight about later on when the seller really doesn't have the leverage or the right to start asking for more. Because now I'm thinking like, all right, I'm basically dictating as the buyer the headline number. You like the headline number, take the rest of the deal points. And you can either live with it or not, but you can't talk to anybody else legally. So I got you in a bear hug.
I'll take that $20 million deal. We'll figure out the details, Pete. It's going to be fine.
Some people say that.
I feel like I could pick your brain on deal things for hours, but I want to transition a little bit to you kind of personally, just so people can understand like why you are the way that you are. I know you have an athletic background, and I know you have your PE background. How do all those pieces of your background kind of impact who you are and how you show up in this Halo sector?
I was always the goalie, or I played defense in every sport that I've ever played back in high school. So if you're the goalkeeper from age like 8 until like 50 is when I stopped playing, I'm not responsible for us winning. I'm just responsible to make sure we don't lose. I'm not the one who's getting the game ball at the end because I didn't put points on the board. I kept points off the board. Being a goalie is a very lonely and humbling place to be on a soccer field. I played defense in hockey, and I played defense basically in every other sport. So the mentality of playing defense is like you want to be part of the support team that allows the company to win or allows the team to win. So I've always been comfortable not being the CEO of the business. I want to be like the conciliary to the entrepreneur and like be the one whispering in their ear or being like, hey, this is the deal we take and let me like polish it up and let me help you get it over the finish line. So that ego was kind of checked at the door when I decided to put the goalie gloves on, and I basically never have taken it off. The one thing I also learned in sports, and I think on LinkedIn and other social media platforms, it's kind of like everybody's highlight reel. I'm leaving in a mural or, club level or varsity sports, and I'm going to like go into business. I'm going to win every day. And I liken an advisor or any company executive, you're basically like a professional baseball player. And if you think about playing on a baseball team and you play 162 games, you are definitely going to lose at least 62 of those 162 games, and you're probably going to lose every other day on average. Better get used to losing. Better get used to like picking yourself back up and getting back on the field to try and win the next day. And I used to be super hard on myself and thinking that deals didn't happen because I didn't give enough effort, or I should have read this document, or I should have showed up on a Zoom, video and not audio, and that's why like this deal didn't close. And I was really hard on myself. I beat myself up about it for a long time until I realized, and it was only like this year when I like really had full clarity, that if you go out there and you play your hardest every day, it's the best that you can do. And if we lose, I'm not having any regrets. So I think it's really important for people in the deal business, people that are building companies, to realize that, you know what, your baseball team had a doubleheader and they won one and they lost one. And if you win 3 times a day and you lose once a day, like you're ahead in business and in life. That's something that kind of was eye-opening to me because I used to blame myself on like the smallest things, and I don't do that anymore. And I just know that that's kind of part of the game.
Well, you say it's part of the game, and that was definitely one of the most important pieces of advice that you shared with me a few years ago, where fails are part of the game, play the next game, move on, goal got scored, move on. And I think often as athletes, as competitive people, you want the win, you want the W. I appreciate you and your perspective on the losses that come with playing this entrepreneurial game.
When you and I were talking, and you took a big risk. I mean, you started a company like in the middle of COVID. Like, who else did that, right? You knew that the cards were stacked against you. You were going, with a contrarian view, which turned out to be the right view. It just, the pieces didn't come together the way you wanted it to. But the best thing to do is be like, hey, I played that game. It was like you were playing soccer on like an inverted soccer field. Okay. And you're like, I'm just going to keep playing. And at some point, like the bridge is going to come down and like, I'm going to be going downhill, right? That's what you tried to do. So after doing that, you're like, hey, I learned a lot from that. I'm smarter than I was before. I took a risk, and now like I know what it's like to take risks, and I can better calibrate the risk. I've invested in 7 companies. 2 of them will be successful. 5 of them won't be. And I thought when I started investing at age 40, which was 13 years ago, I thought like, I'm going to bat 1,000. Like I know everything about the fitness industry. How can I lose? And I realized that like, hey, there's other factors besides like your brain and like what you think strategically you should do that you have to calibrate. And some of that is going to be headwinds. And some of it's going to be tailwinds. And some of it you're going to get lucky. And sometimes you got to figure out like that venture capital is adventure capital. Okay? Because you have no idea what's going to happen. And you're dealing with like a really small company and you are on like a safari adventure, like without a seatbelt. So I tell people if you're going to invest your money, like invest it in yourself, be very cognizant of doing early stage deals. When somebody comes to you with a mature-ish business and they get to you and say, hey, can you put 50 grand or 100 grand into my company? Like, you're not the first call. Like, you're their last call. And they couldn't get it from institutional capital sources, which means there's something about the business that isn't proven yet, or that isn't something that investors that do this for a living, invested in companies, are prepared to do. So your risk needs to be requisite with the potential reward. And I would just say, be careful with your own money.
I think I speak for the entire Halo sector when I say thank you for everything that you do to advise us all on deal making and helping us navigate through chaotic times, contrarian times, uphill times. You're a trustworthy voice in the industry, so I appreciate you, and I appreciate you being here with us today on the Society Pod.
Thanks. And just know that everything that everybody's doing in the sector is like, you just have to keep making progress, learn from, the days that things happen, and, you're going to be better, stronger, and we need you. So keep fighting, and I appreciate you.
Thank you, Pete. Appreciate you.
Go Halo.
We hope you enjoyed this episode of the Society Pod.